Hello everyone, welcome back to the channel. In today's video, we are going to discuss practical challenges in implementing IFRS. So, we are discussing the subject CFR, which is common for Bengaluru North University MCom third semester. So, already we have discussed the first chapter in CFR and we have started our second chapter that is all about the IFRS. So, till now, in the second chapter, we have discussed the meaning, definition, features, advantages, disadvantages, and the process of IFRS. So, we are going to continue this chapter, and the next unit in this chapter is all about the practical challenges which the companies or the auditors come across while implementing the IFRS. Obviously, when the old accounting system or old accounting standards has to shift for the IFRS. It means when we are moving from the Indian GAAP towards the IFRS, or we are going from accounting standards to the IFRS, or we can say Ind AS, it is a much difficult task. So what are the challenges the companies, the corporate or the industries or the auditors or the accounting professionals they came across for implementing this IFRS? So there are many challenges which should be faced. So the first for the first challenge is change to regulatory environment. So for the success of convergence in India, so here I told you in the beginning of this subject, the introduction of this subject, I told you what is IFRS. So IFRS is the newer version of International Accounting Standards. So IAS newer version is IFRS. So our India has prepared its own accounting rules in line of IFRS, that is called as Ind AS. So we can here assume the challenges, the same challenges can be for the Ind AS, for Ind AS implementation also. So here certain regulatory amendments or changes is required. For example, the Companies Act. So the Companies Act, the newer Companies Act is 2013. It describes the format for presentation of financial statements for Indian companies, where the presentation required is significantly different. Here what the Companies Act is telling about the presentation of financial statements is different from the rules mentioned under the IFRS. So here the major challenge which the Indian people came across was our Companies Act and the IFRS has a different rules for the financial statements, for the presentation of the financial statements. So here changing the regulatory environment means changing the Companies Act was a major challenge. So if we want a uniform rules, if we want to follow the same rules which the all over the world is following, we need to change the Companies Act rules regarding the financial statements presentation. So this was the main first challenge, that is changing the regulatory environment, changing the Companies Act regarding the financial statement presentation. Next challenge was lack of preparedness. So the IFRS was came into existence in the year 2011. So in the year 2011 it came into existence. So before that there was no preparedness, no effective training was provided for migrating to the IFRS. So before we are following the accounting standards, or we can say the generally accepted accounting principles, which were different in different areas or different in the different countries. The US used to follow the US GAAP. India used to follow the I gap, that is Indian gap, and the UK used to follow the UK gap. So different rules, different accepted principles in different countries, so that is called as gap. When we are shifting from gap to the IFRS, the migration is a challenging one. For migrating the for migrating from gap to IFRS, some preparedness, some plan, some training was needed. Additionally, the auditors need to train the staff to audit under the IFRS environment. Obviously, the IFRS is a newer concept to everyone. So, a newer concept to auditors also. Auditors also need to be trained by the experts. So, lack of preparedness, lack of plan, lack of training was also a major challenge for implementing the IFRS. Next, educating the stakeholders. So our stakeholders are the one who is interested for the well-being of the company. So educating them, letting the information go in flow to their doors is also needed. So educating stakeholder comprising of the investors, the lenders, the employees, the auditors, the audit committee, etc., would be a big challenge, as this would require a considerable time and effort. So, obviously, educating each and every stakeholder, for example, educating the employees. Employees require a very lot time and effort. So, employees, there are many employees may have different nature of work. So there will be a section called as finance, there will be a section called as HR, there will be a section called as marketing and environment, there will be a section research and development. So here for the finance people, it will be some related subject, right? IFRS relating to finance, they might have studied in their education, their academics. So it will be a related subject for the finance people. But for the other people like HR, like marketing, research and development, educating them, training them, knowing them what is IFRS takes time. It takes time and it takes efforts. So when we are patient, when we want others to understand IFRS, because if a company is implementing the IFRS includes rules and regulations, the standards in every section, every work of a company. So the people of the company, the people who are working in the company, or the people who have invested their money in the company, they need to know what the company's financial statements is being prepared with. So IFRS, educating IFRS to all these stakeholders takes a lot of time and lot of effort. That is also a major challenge for the IFRS implementation. The next is the significant effect. You know that when a thing is very popular and it is very famous all over the world, naturally and obviously it will be a costly one. So here IFRS is also a uniform rules and regulation which has been followed all over the world, and which is being followed by the developed countries like the European countries and also the US. So like we have prepared the our Indians in conversion in line with the IFRS, there is a significant cost. So significant one time cost of converting to IFRS, like it includes the internal personal time, adapting IT system, installation of the good systems, laptops and other information technology, like some applications, implementing the revised reporting policies process, training the employees, educating the investors, analysts and the members of the board. So there is not so easy to migrate to IFRS. We need to change the whole structure of our company. We need to bring new and updated and fast working computers, laptops we can say. We need to shift for a good network system. We need to educate our auditors, or we need to educate our employees to work in those systems. Everything, every structure, every environment of our company need to be changed. In that also we need to provide a good fees for the auditors, CA, or, or any public accountant who is verifying our books of accounts. So overall there is a huge cost for the IFRS. That is also a major challenge for implementing the IFRS. The next one is the complexity in the financial reporting process. So here, under IFRS, companies would need to measure the assets in the fair value. So in the last chapter we discussed the last three international accounting standards. So in that I told you what is fair value. Fair value is the estimated value of an asset, right? Here according to IFRS, if you want to show the financial statement, if you want to show the assets value in the financial statement, you should uh, go with the fair value. But the but measures in the preparation of the financial statements, the company's auditors and the users and the regulator would need to get familiar with the fair value measurement techniques. So here, if IFRS is telling us to follow the fair value, for fair value, calculating the fair value, measuring the fair value is a difficult task for the auditors, the investors, and the other users of the IFRS. Why it is very complex? It is very complex. Why means fair value, it is the estimated value for an asset. So estimating the value of an asset which is being held in the company for so many years is a very difficult task, and it can be done by an expert only. So anybody, any employee, any user cannot estimate the fair value. If he estimates also, it will not be an accurate value. So complexity comes where in the measurement or in the calculation of the fair value of the asset, as IFRS requires to. So the next challenge is impact on the financial performance. So due to the significant difference between the IGAP, that is Indian GAAP, and IFRS, adoption of IFRS is likely it to be a significant impact on the financial position and performance of the most Indian companies. Why how it affects the financial position or financial performance of the Indian companies means. So here in the last points we discussed that it takes a very lot of time and effort to educate the stakeholders, to educate the finance workers to implement the IFRS. So here a lot of time is taken in the financial year. We can say half of the year, like 6 months took for understanding the IFRS. So in that process, while a person is just understanding, where he has begun to understand some concept, how he can efficiently work, only after he has some experience, when he has some failures, then only he can work efficiently and he can give his 100% when he know all the scenarios, where he can, where if he done this thing will happen. So if he do this thing, this will went to wrong, and it will take it will damage to the financial position of a company. So IFRS, where we are migrating to the IFRS, it takes a lot of patience, it takes a lot of effort and a time, and also it can damage a financial performance. Next is communication of communication impact of IFRS to investors. So here one of the major or the main user of IFRS, we can say, or a stakeholder is is investor. So investors are the person who have invested their um, money earned with very hard work, with trust, with confidence. They have gave their money, they have invested their close together money in our company. So if we don't let if we don't let them to understand what is IFRS. So for example, investors, they have invested their money in the company. So investor, at any time, he wants to see the financial statements. Either it is an old investor who is an existing investor or a coming investors. They want to see the financial statements as it's their money, how the company has worked, what is the profit, what are the losses, and every expenditure, everything, the financial statements they want to see. Now IFRS, with in line of IFRS, if we have prepared our financial statements and that is not been understood by the IFRS, by the investors are not getting what is being prepared in the prepared what according to what the financial statements is being prepared. Now what happened, they might be confused, and they in their minds there might be any confusion, dilemma, or any doubt that what is the what is the company people doing, as they are the real owners of the company. They want some clarification. So to avoid this scenario, before only we have to educate the investors, we have to communicate with the investor for converging with the IFRS and ensuring them to shift from Indian GAAP to the IFRS. If they don't permit us to shift from Indian GAAP to IFRS, we cannot shift the whole company's structure to the IFRS immediately before the insurement, before the permission of the investors. So investors are the people who have invested their money and they don't have any kind of background like finance, like terminologies like IFRS, like CFR, like Indian GAAP, like accounting standards, like international accounting. These are the things which can be understood by a person who have interested in those things, or who have an experience in those things, or whose work is that only. But people like common people, they don't understand so easily. So communicating with the investors, who includes a common man also, a business common man, or it can be a retired teacher, it can be anyone who have money and who has invested in your company. So communicating with your investor is a major challenge. Without their permission, we cannot migrate from the Indian GAAP to the IFRS. Next, conceptual difference. Now what is this conceptual difference? So here one thing, the major difference here or a challenge is all about the intangible assets. So here intangible asset, according to the Indian standards, Indian GAAP, the intangible asset according to Indian GAAP have a definite life which cannot be exceed 10 years. So according to IGAP, intangible asset life is 10 years and it cannot be exceed more than that. But according to IFRS, certain intangible asset may have indefinite life and useful life in excess of 10 years. So it is just an opposite of IFRS. Sorry, GAAP. So according to IFRS, intangible assets may exceed have an indefinite lives. So indefinite life means the life of the intangible assets like the brands, the goodwill, the patents, the trademark, or our knowledge exceed to 10 years and more, and it has indefinite life. So different rules for intangible assets, different conceptual framework. When we study the Indian GAAP, we found different conceptual framework. When we are shifting to the IFRS, we found a different conceptual framework. So this is one of the example of the intangible assets. So in case of intangible assets, according to the Indian GAAP, Indian standards, the intangible asset has a definite life of 10 years, and it cannot exceed the life of 10 years. So they are stopping to 10 years only. But according to IFRS, they are telling that the intangible assets has indefinite life and it can exceed to 10 years also. So there's a major difference. So this is also one of the major challenge for implementing the IFRS. The next one is legal and regulatory consideration. So here legal and regulatory consideration in India, in Indian GAAP, differ from the IFRS. So here Companies Act 1956, Banking Regulation Act 1949 or SEBI guidelines prescribe detailed formats for financial statements that should be followed by the respective enterprises. In such case, adherence to IFRS in India would result in various legal problems. So here I told you in the beginning of the subject only, there are in institution Indian Chartered Accountants of India, there are many institutions which are associated in forming the accounting standards. I told you there will be RBI, there will be SEBI, there will be Banking Regulation Act, there will be Income Tax, there will be Companies Act. There are some associated supervised organization which have a head for all the other organs. Like for bank it has RBI, like for stock market it has supervisory organization SEBI, for banks to be run the Banking Regulation Act, for Income Tax Act. So for companies corporate it has Companies Act. So here there is no single or sole authority to frame the accounting standards in India. We need to consider all these organizations. So different rules of different supervised organization. RBI has different rules, SEBI has different rules, Companies Act has different set of rules, and Banking Regulation has a different set of rules. Income tax has different set of rules. So it is a type, it is a kind of strict adherence, a type of strict we can say a type of strict complexity adherence which is coming in between the IFRS implementation. So all these organizations are an adherence, they are coming in between for the implementation of the IFRS. So IFRS does not consider all these organizations uh, mm, uh, organizations suggestions, because IFRS is being prepared not in India, it is being prepared in the other countries. It is being prepared by International Accounting Standard Board. So here taking consideration, taking suggestions of all these organizations is not been possible. The last challenge is training to the preparers. So some IFRS standards are complex. There is a lack of adequate skills among the preparers and the users of the financial statements to apply IFRS. So proper implementation of such IFRS requires extensive education to the preparers. So here preparers means the persons who is going to frame the IFRS. Okay, we can say here the certified public accountants or the expertise. So for them also they need some preparedness. For doing this class I need to prepare. If you want to deliver a speech, you need to prepare yourself. At least you need to keep in your mind what you want to speak, right? If you want to go in a debate, you will search for the topic, what is the topic being considered, what you are going to play, what points you are going to deliver in the debate. Like that only, if they want to prepare the most, you can say the higher most important accounting standards, they also need some preparations. So preparing them is also a major challenge. This is all about today's class where we have discussed about the practical challenges in implementing the IFRS. Hope you have understood all these points. If you have any doubt, you can ask me in the comments below or in my WhatsApp group. And if you have found this video to be useful and if you have understood this concept, please subscribe to my channel and hit the like button, and I'll see you in the next class. Thank you.